What are some of the investing tips you've been getting? Let's start with one prompt, which would be, we get a rate cut in December, the economy starts accelerating in 2026. Where should someone put their money?
Sure, I've heard several investors cite small and mid-cap stocks as one of their favorite areas of the market. Valuations there are pretty low, and they do benefit from rate cuts. They're a lot more sensitive to rates than larger companies. So, if the economy does recover, then those should benefit.
Great, and I also wanted to share some specific recommendations from Bank of America. We've got a few ETF recommendations here. They are saying to look at home builders, real estate, and retail, which are generally areas that are correlated with the economy expanding and an economic boom that would be catalyzed by a rate cut. So let's turn it the other way. You're fearful of an AI-driven meltdown. You're like me. You're a little skeptical. You think maybe a reckoning could be coming. What do you do for safety? Where do you park your money to be safe?
Yeah, one investor I spoke with recently had a pretty interesting idea. Basically, buy momentum indexes. So what these do is they track what's been rising in the market most recently. So AI, of course, is where they're weighted most heavily now. However, if we do get a multi-year, 3-year bear market in the tech sector, like happened during the dot-com bust, then these indexes will basically automatically adjust to what else takes the lead in the market. So if it's defensive stocks, for example, they'll automatically shift into those and get out of AI stocks. So
it's sort of like a self-optimizing portfolio. I suppose like the one caveat there is like the downturn needs to be pretty prolonged and it needs to be like in one specific sector.
Yeah.
But that's surprising. And I mean, I guess you probably found the only investor that was up during the dot-com bubble. So good on you.